In just 130 days, gram gold experienced a 23% drop and everyone was shocked. But actually, the problem is bigger than you think. Gold has fallen even more sharply. There's a mistake people are making here, and I'm going to explain it. Why did gold fall? Will it keep falling? What do experts expect for gold in the short and medium term? We'll cover this now and touch on silver too. Let's get started with our video. Friends, as you can see on the screen right now, gold experienced a 23% drop in just a short period of 130 days. But the mistake people make here is that they immediately look at gold in terms of their own country's currency value. Let's talk about Turkey. The price of gold in TL dropped by 23%. But the reality is actually worse than we think. The gold ounce chart is important. In other words, the relationship between gold and the dollar. Globally, the parity between these two is the most important, and it experienced a drop of nearly 30%. So, someone who invested $100,000 in gold experienced a very sharp decline in just about 130 days. They were left with $72,000. What does this mean? People preferred the dollar over gold during these 130 days. Or rather, they sold their gold and switched to dollars. Silver, on the other hand, dropped by 50%. They call silver the devil's money. This is a very exotic term, the devil's money. They say it in this sense. It rises sharply and falls sharply. It is indeed volatile, and especially, you know those surges it made, friends. Just look at those surges. Everyone keeps calling over and over. How do we buy silver? Should we buy silver? It recently surpassed $110. I had a friend. My close friend Samim asked me, should I buy silver? I said, even over the phone. I don't give investment advice, but personally, I wouldn't buy silver at this level. Because it's like a ticking time bomb, ready to go off at any moment. It could go up to $200 from here, but you would be buying at $110. Then you might end up having to try to sell at $70. Or it could stay below $110 for years. As a matter of fact, he didn't buy, and it stayed at $67, because anything that's overly inflated has a bubble. These overheated products, extremely overheated products, have gotten way too hot. So why should I buy a product that has risen so much in such a short time? Instead, I would buy a product that hasn't gone up yet. Right now, gold has skyrocketed, silver has skyrocketed. Everyone is going out and buying gold and silver. At that moment, for example, you should have been looking at the stock market. But the opposite perspective happened. It was experienced. And I said this about gold. Now we're going to talk about why gold has dropped. But look, friends, I'm going to open the monthly chart for gold, and I'm resetting the chart. Now I made a video before. I said that gold could stay in the red for a very long time, everyone is buying and so on. At that time, someone commented like this: I listened to you, I was left without gold, and now I'm at a loss. I wish I hadn't listened. And I said this: sometimes gold leaves us in the red for a long time, for years, and when you wrote that, you said you were going to buy gold at $4,500 per ounce. Then it went up to $5,500 or something, but now it has turned back. The ounce has returned to $4,200. So I was proven right. But the point here isn't that I was right. What I wanted to convey was this. For example, let's look at the period between 2011 and 2020. Now, what I'm saying is, brother, don't buy at the peak of 2011, then do whatever you want after that. How can we know this? How can we know this peak? This is where something else comes into play. I'm asking people, are you going crazy? Are you losing your mind to buy silver? Are you saying, no matter what, I'm going to buy it? How much do you have, brother? Let's say, just to make it clear, I have $1,000. Then buy silver $100 at a time. Buy $100 worth every month. If you're going to spend $1,000 anyway, this way you'll feel more comfortable and you won't be the person who bought at the very top. Now look here, friends. On the monthly chart, I bought $100 here, $100 there. The next month, instead of buying at $2,000, I bought $100 worth at $1,500. See, I spread it out even more and bought at $1,100, spread it out even more and you bought at $1,040. So your average is somewhere around here, and maybe you'll still be in the red for 3 or 4 years. But this way, you'd be in the red for 10 years. There's an even worse case for gold. Look, do you know when someone who bought in 1980 finally broke even? Someone who bought in 1980 only broke even in 2008. It took 28 years to break even. So don't be the fool at the top. You have to pay attention to this. Some influencers come out, they say gold will rise like this, gold will rise like that. They're just trying to gain clout from that. They love hearing people say gold will go up. Why? Because they have gold themselves. And what I'm saying is, I'm not here to make you happy. I'm trying to tell you the truth. Gold can sometimes leave you in the red for years. For example, this means maybe, I'm just saying maybe, we won't see the 5,500 level again for many years. So then, we'll have to buy gold in installments. Gold is not an instrument for quick investment or getting rich. Gold is this. It's actually my reserve fund, my backup asset. I put some into the stock market, some into gold, some into interest-bearing accounts. 20 or 30% of this stays in gold. That's the logic behind gold. Friends, all right, we've understood the idea. Now let's look at why gold is falling. There is only one reason why gold is dropping, friends: war. And I explained this a few videos ago as well. This situation is absurd. Why does gold fall during war? We were always taught that gold rises when conflict starts. But this war is an oil war, and oil wars trigger inflation. If the price of oil suddenly jumps from $60 to $120 per ounce, inflation might increase by 30%, maybe even 40%, because there's a perspective that not everything is about oil. But there's a point that's being overlooked here. The supply of oil hasn't been cut in half. So why is the price of oil doubling? Only 20% of the supply passes through the Strait of Hormuz. There are panic buyers and panic sellers there. And smart money took advantage of this very well, and oil suddenly shot up to $120. Trump said, let it be $200 if it wants. Some people said it would reach $200. But what happened now? Oil dropped to $87, but there is oil that went from $60 up to $87, $90. This means that our inflation could come out high. If inflation comes out high, the Fed has to raise interest rates. If the Fed raises interest rates to fight inflation, then everyone sells their gold, sells their stocks, and moves to interest-bearing assets. This concern is what brings gold down. So it's very likely that we'll see gold relax once the war in Hormuz is over. So what will happen to gold in the short term? Now, I will look at the short and medium term for gold. By the way, my friends, you can easily buy and sell gold, silver, or stock shares on Binance. You can sign up for Binance and complete your identity verification right away by scanning the QR code you see on the screen or by clicking the link in the video description. Don't forget about the welcome bonus of up to $500. For the short term, you can consider the next few months, and for the medium term, think of 3 to 12 months. Let's talk about the short term first. Fears of interest rate hikes and tightening, along with strong US economic data, especially employment figures, have completely erased the market's expectations for a Fed rate cut. Instead, the probability of a rate hike by the end of the year is at 60%. It has risen to the 60 to 70% range. This is one of the reasons for the decline in gold prices. In the US, 10-year yields and the DXY index have risen, but in turn, gold prices have also declined. Now, when we look at the technical outlook, gold has pulled back sharply from its peaks at the beginning of the year, around $5,600, to the $4,300 range, and has slipped below the psychologically important 200-day moving average. Analysts are watching to see whether the 4,280 to 4,300 support zone will hold in the short term. If this zone is breached, the short-term pressure could deepen for a while longer. In other words, we might see a bit more of a pullback. The comments from BofA and Wells Fargo are as follows. Friends, they see the short-term pullback not as a breakdown of the structural trend, but as a buying opportunity before a medium-term rally. So let's look at gold's medium-term target for 3 months and 12 months. By the way, right at this moment, what should we say to those who like the video, subscribe to my channel, and leave a comment? May they find gold, God willing. Yes, friends, don't forget to like the video. Don't forget to subscribe to the channel. Your support is very valuable. Despite short-term headwinds, the 12-month and end of 2026 projections from Wall Street giants include quite aggressive upside targets. Friends, of course, nothing I explain in this video is investment advice. I've read the reports and I'm sharing them with you. The banks argue that short-term interest rate pricing is temporary, while structural problems are permanent. Here are the opinions of the leading banks and investment firms in the US. JP Morgan expects a 12-month target and a price of $6,000 to $6,300 per ounce by the end of 2026. They cite the expectation that central banks' aggressive purchases and ETF inflows will accelerate in the second half as their reasoning. Wells Fargo expects between $6,100 and $6,300 per ounce. Their reasoning is the contraction on the supply side and the fact that individual investors have not yet fully entered the market. Bank of America expects $6,000 per ounce. The reason for this, friends, is the debt crisis. In other words, they call it debasement. Deutsche Bank also expects $6,000. UBS expects between $5,500 and $5,900. Goldman Sachs expects $5,400. Morgan Stanley, on the other hand, expects $4,800. When it comes to gold, Morgan Stanley is one of the most cautious institutions on Wall Street, friends. They think the momentum is slowing down. But overall, when we look at the medium term, by the end of the year, everyone is expecting around $6,000. In other words, it seems likely that we will see some movement in gold, especially in the last quarter. I hope the video was clear. Hope to see you in the next video. Goodbye.